we're talking about what we've seen on Wall Street over the last several weeks. It has been a wild roller coaster on Wall Street as stocks go up and down following tariff announcements from the White House and other countries. And joining us now to talk more about what's happening is Justin Leland, the Director of Business Services and a Senior Financial Advisor for Moneywise Wealth Management. Justin, thanks so much for coming on. Appreciate it. So it is 6:44, so stocks have been, Wall Street's been open for about 14 minutes now, and we're actually up. I mean, we're up about, right now, about 1,300 points.
Correct.
So it just kind of illustrates this big up and big down scenario that we're seeing, that we've been seeing play out over the last several weeks. But the big headlines over the last couple of weeks is the fact that we've seen so many days of big dips. I mean, in some instances, historic dips, because we've seen them go back to back. Talk a little bit about what we're seeing right now, and why are investors so scared and on edge at this point?
Well, to be clear, this is we would look at this as being semi-normal, and I understand when we see big drops like this in the number of points, it does grab headlines. But when you look at the percentages, they are large percentages, but they do wind up being in line with percentages from other time periods. When you look at how the markets go, bears tend to go up the staircase, and bulls go up the staircase, bears come down the elevator. So when we look at those things, the bears, when it comes down, it tends to come down relatively fast.
And that's what we're seeing right now.
Correct, and that's what we're seeing. But if we look at what happened when we opened the markets yesterday, we were actually trading at the same levels that we were trading at in April of last year. So we did come down, but we weren't coming down to the point where it's like, oh my goodness, we're really crashing to all-time lows or something like that. We were still in line with where we were last April.
So we've seen so many financial advisors, give their forecast, their prediction of whether or not we're headed toward a recession. And it's, most of, the big names are saying it's just above 50%. So just enough to cause just a little bit of concern, a little bit of panic, just because their predictions are now over that 50% threshold. But what does that actually mean? I mean, are we actually, in fact, headed toward a recession, or is it just way too early to tell?
Well, I'm not in the prognostication game. I really look at this as saying, if you're an investor that's looking at your 401k and you're worried about what's going on, it's perfectly normal to be worried. But when we're looking at where you should be with your 401k, with your investments, remember that the more you touch it, the more it disappears, right? Think about it like if you're planting a tree. You plant a tree, you're not going to dig up the roots every week to see if it's growing, because if you do that, you're going to kill the tree. So if you're investing long term and you're planning long term, you want to make sure that you have those roots in place. So touching it all the time is not going to be the right play for you.
What should you be doing right now if you are an investor? If you've got some skin in the game, right? Like if you are investing and you're kind of, there's a lot of people who are panicking right now. They don't know what to do. They're scared about what the future is going to hold, and they're already seeing some of their money go away. So what should people be doing right now?
Well, and that purely depends upon that person's individual situation. If they're younger, if they're somebody that's very early on in their career, this is just a blip on the radar. This is going to be something that, hey, dollar cost averaging, you're going to continue to put money into that investment, into that 401k. You're going to continue putting that money in. If you're somebody that's 3 or 4 or 5 years away from retirement, and this is something that's, oh my goodness, we're really looking at a deep dive or something like that, this is a time when maybe you should be talking to your financial advisor to kind of talk about what your asset allocation looks like and to right size what your portfolio is. And in some cases, this actually may look like a great buying opportunity in some cases.
So I was going to ask you about that, because I know that, I know you guys have always talked about how Wall Street can be very emotional, and you see those big ups and downs. What we're seeing right now is a prime example of that. How can you take advantage of this situation?
This is, again, where when you're right sizing your portfolio and you're rebalancing that portfolio, if you're out of whack, if that allocation gets out of whack in any way, if you're looking at a pullback, which when we look at these things and we're predicting and looking at the overvaluation of the stock market, which had been overvalued for some time over the past 2 years, it had grown so much, it was due for a bit of a pullback. It really didn't matter what the catalyst was to bring that back into line. The tariff conversation or global political issues, or it could have been any catalyst. It just happened to be the Trump tariff talks that brought that into the fore. So those types of things brought that valuation back down. This is one of those situations where it could very well be, if you're in the right mindset to reallocate those portfolios, a perfect time to reallocate, get that right allocation perfect again, and rebalance the portfolio for future growth.
All right, Justin Leland with Moneywise Wealth Management. Appreciate you coming on to kind of put this in perspective.
Thank you.
All right, we're going to take a short break, have a look at your forecast after this.